All right, so let's see where we left off, okay? In this case, right, we left off, we finished up on the 15th, okay, and we completed calculating our cost of goods sold here. I believe we didn't journalize that part, so let's go ahead and journalize it for the 7151, okay, for the 7151. Okay. I updated that one already, so that's good to go. So let's see. Let's see what happened next. Okay. So then May 18th rolls around. Customer A decides to pay in full with cash. So in this case, right, let's take a look at when we actually sold to customer A. We sold to customer A, let's see. We sold 20 mugs to customer A on the 6th of May. Nothing happened here, no returns or any allowances here. However, we gave them terms. Now let's see, did they meet the terms?
Yes.
Okay, so it's so we sold to them on May 6th, and the date today is May 18th.
No, they missed it by 2 days.
They missed it by 2 days because it's 10 days, not 15. So in this case, no, they don't get to take a discount, but they did pay early. So in this case, right, let's take a look at our journal to see how much is the total amount that they owe us. So again, this transaction happened on the 6th of May. So here we are, accounts receivable sold to customer A, and we sold to them a total of $257.12. So $257.12. Okay. So since they didn't make any returns or any allowances like that, we can go ahead and proceed with the payment on the 18. So if they're trying to pay off what they owe us, how should we journalize this? Customer A paid in full with cash. So how are we going to record this transaction?
Cash first.
Cash first, good.
So we take it out from the account receivable, no?
Good.
We have a sales and we have a tax. Sorry.
In this case, they're just strictly only paying for what they owe. This amount that we owe, we already charged them for the sales itself. We've already recorded the update of inventory. So in this case, all this is strictly doing is that the customer is just paying.
So just that's all.
And let's go back up and see how much it was again. It was for the total of
The 257.12.
257.12. Okay. 257.12, and I'm gonna make my note here saying that customer A paid
Where does it
in
come from? This number is
the 257.12.
Yes, it's 260 and 57, no? That's
Where did you get 260.57?
Is the fifth? Is the sixth, right?
6 right here.
We have a 216 and cost of goods sold 57.12. So I don't know what is
Ah, yeah. You're right there. I don't know what I did there either to get to that amount either. How did I get 257.12? I'll have to go back and
No,
look.
57.12 is the cost of goods sold that we have on this because we sell 20 mag and we give him 6. That's what we have. And the cost of goods sold 57.12. But the account receivable is 216.
I got it. All right, so there you go. 216.12. Or was it 216? 216.50. So that's exactly how much they owe me. 216.50. All right, 216.50. All right, and customer A paid in full. Okay. So then let's take a look at the next transaction here. So that was on the 18, right? We also sold more stuff. You also sold on top of that 50 more mugs at $10 each for cash. Oh, okay, that's right. So again, this is May 18. We sold 50 additional more mugs at $10 each. So here, what is my total sales?
By 100.
500. How much taxes am I going to be collecting?
41.25.
41.25. So therefore, in grand total, how much cash am I going to be receiving?
541.25.
541.25. Good. And now we need to calculate our cost of goods sold because this time we sold 50 mugs. Okay. So cost of goods sold. Okay, inventory worksheet. It is 615 or 618. And we sold 50 mugs at what total cost? What's my total cost? Oop. What's my total cost?
One 143, yes. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143. 143
ahead.
0.01.
So let's go ahead and update our inventory. All right, we sold 50 units. So we should have a total of 570. Right? And that should just also bring my average cost per item to still be around the same number. The sorry, the 2.8602. Okay. And this time we actually got the number here for selling 50 mugs was a total of 143.01. So then finally on May 20th, okay, we end up purchasing an additional 400 mugs at $2.80 each, with the freight costing you $80. Okay, you place it on an account for Cuppy's Co. with given terms that it's 5% if you pay within 15 days. If not, the whole thing is due in 30. Okay, so let's see, we just received another purchase of inventory. So we need to do our purchase of inventory, which is the mugs. And yes. So here, mugs in accounts payable. Okay, and it's the 20th of May, right? So we bought mugs. We bought 400 of them at $280, $2.80. Okay, plus a freight of $80. What is my grand total that I purchased?
$1,220.
Where did you get that 20 cents from?
Not 20 cents, $20.
No. It's
1,120. That's what I find with the freight.
1,120 plus $80 freight. So what's your grand total?
So
1,200.
1,200.
Yes. Okay, good. And this, okay, then you also need to update your note here. Cuppy's Co. We bought 400 mugs at $2.80 each. Okay. So let's go ahead and plug that into our inventory worksheet. Inventory worksheet here. Okay. So we have May 20th. Not June 20th, May 20th. Okay, we bought 400 items at $2.80 with a freight of $80. So let's see. Giving you a total cost of $1,200. Okay. So let's go ahead and update our inventory since we purchased inventory. So we should have a total of
970.
970. Okay. We're going to take our 16, 30, 32, and we're going to add our 1200 to give us a total of
28, 30, and 32 cents.
28, 30, 30, what?
32 cents.
32 cents, good. Good. Bringing our cost per item now to be increased to $2.91,785. Okay. All right. All right, so that was on May 20th. We also sold an additional 30 mugs for cash. Okay. Okay, so we sold additional 30 mugs for cash. Okay, $10 each for cash. Okay. So how much was my total sales if I sold $30 mugs at $10 each?
300.
300. What was the tax I charged?
24.75.
24.75, bringing the grand total to be 324.75. Okay. Okay. We sold 30 mugs, so let's go ahead and solve for the cost of goods sold here. So this time it's May 20th and we sold 30 mugs at a cost of 2.91785. So therefore, what's going to be my total cost of goods sold?
$83.54. I'm sorry, $87.54.
Good, $87.54. Okay. So once again, let's update our inventory here since we no longer have 970 since we sold 30 of them. We should have now 940. Okay. If we take the $2,830.32 and we sold $87.54, how much should we have in grand total?
$2,742.78.
Good. Okay. Bringing our cost per item to be similar. Almost the same. Okay. All right. So here we have $87.54 that we sold. So here, $87.54. $87.54. Okay. Okay. So then on the 22nd of May, customer B decides to pay in full with cash. So let's take a look at customer B. When did we sell to customer B? I think we sold to them on the 12th. You sold 60 mugs at $10 each to customer B on an account. However, on the 15th of May, right, customer B decided to return half of those items. Okay, so let's go ahead and take a look at that transaction so we can figure out how much customer B owes me. But at the same time, let's also figure this out. When did customer B purchase stuff from us? Purchased on May 12th, okay? And in this case, he's paying it on the 22nd. So, did he also meet the discount period?
Yes.
Yes, he did. Okay, so we have two things to figure out. We need to figure out the total amount that customer B actually owes me, and then figure out what the discounted amount is going to be. All right, so let's take a look at the journal here. Okay. So on the 12th, we recognize that here's the original purchase for accounts receivable was a total of $649.50. Right? And because he ended up returning half of it, right, a refund of the 324.75, therefore he owes me 349. I'm sorry. Where am I getting these numbers? 324.75. Okay. Right, you're gonna take your 649.50 and subtract that 324.75, and you should get the same exact answer. Okay. So that's the first thing you gotta recognize, because he is making a payment to what he owes us. So therefore, it's going to reduce the it's gonna reduce the amount of accounts receivable. Okay? And this is on May 22nd. Okay? Accounts receivable is 103. And in this case, right, if we take the 264.50 minus the 324.75, you're going to get 324.75. Okay? So in this case, how many mugs did we actually sell? He purchased 60 and returned 30 of them. So how many mugs did we actually sell to customer B? 30. Okay, so we give a 10% discount. So in this case, how much is the discount for?
30.
$30, right? 300 times 10% is $30, okay? So therefore, how much cash am I actually going to be receiving from customer B?
$294.75.
$294.75. Okay, so we know that this is that we received cash from customer B and we received a sales discount, right? Or customer B received a sales discount. Okay, which should be account number 406. Or sorry, 405. Okay. So here we recognize that because customer B got the sales discount, right? Got paid within terms. So there we go. And we had indicated that they paid in cash. So here it is, right? Because they paid on time, they received a 10% discount, which is only on the amount that we actually sold to customer B. So in this case, we only gave them a discount off of the 30 mugs that we actually sold to customer B, because they also returned 30 of those mugs. Right? So then I'm going to go ahead and fill in the rest of the information here, saying that customer B paid in full. and received 10% discount. Okay. Here. So let's see, that's the 22nd, and then we end up selling an additional 15 mugs at $10 each for cash. So once again, we need to recognize that we sold an additional 15 mugs for cash. So once again, I'm just going to go ahead and copy this piece of information here. Okay. So in this case, right, we sold 15 mugs at $10 each, right? So how much was my total sales?
150.
150. How much tax did I charge?
$12.38.
Good. Giving me a grand total of cash shipping 162.38. So once again, we need to figure out how much it cost me to sell a total of 15 mugs. So jump right back into the inventory worksheet. Okay. It is 522 and we sold 15 mugs, okay, at the cost of $2.917845. Okay. So then that should give me a cost of goods sold to be what's my total cost of goods sold?
43.77.
$43.77. Okay. So once again, let's update our inventories. Right, because you no longer have 940. You sold another 15. So you should have 925. Right? You also sold an additional $43.77, which brings you down to $2,699.01, which then gives you a cost per item to be roughly the same, right? 2.9178, except it's 4.3 instead of 4.5. Okay. Right. We solved for the cost of goods sold, which was $43.77. So therefore, $43.77. Okay, for selling 15 mugs. Okay. So I'm going to go ahead and start on the next page here in the journal. So let's see what the next scenario is on the 25th of May. Okay. Here you have a sale for Memorial Day. All mugs are 40% off discount. Okay, and again, you sold a total of 175 mugs for cash. Okay. So here I had a store-wide sale for Memorial Day sale where all mugs are 40% off. In this case, I sold a total of 175 mugs for cash. Okay. So how am I going to journalize this?
Cash.
Yes, we sold stuff, so we got cash.
Sales discount.
Sales discount.
Sales tax.
In this case, we're not going to be returning sales tax.
Accounts receivable.
None of these
No.
are on account.
The cost of goods sold and inventory.
Not yet.
Not yet.
We sold stuff. We sold stuff.
So
So how do you journalize something that we sold? Sales.
sales.
Yes.
I forgot we had to say no tax, so I didn't say sales tax.
Yep.
Sales and sales tax. So I just get
Yep.
lost there.
It's okay. No worries. So in this case, right, because we're charging the customer at time of this in store, right, we charge the sales tax afterwards, okay? Where the other scenario, when we were doing accounts receivable, right, we already charged the sales tax. If they receive a discount, that means we have to give them back their money. So in this case, no, we're not going to have the sales tax under here, right, because we haven't even charged the customer sales tax yet. So in this case, that's exactly why we have to understand that when you do an in-store sale, you do the discount first and then you do the tax after. So cash, once again, is 102. Sales discount is 405. Sales is 401. And sales tax payable is 230. Okay? So in this case, right, let's figure out the total amount of sales that I actually had without the discount. So this is going to be, we sold a total of 175 mugs at $10 each. So what is my total sales that I actually received? Or in this case, earned.
1,750.
1,000. Now, if this was a discount, 40% off of the total sales, how much is my discount?
700.
$700, okay? So therefore, if I sold a total of $1,750, but I end up discounting $700, so that leaves me $1,050, how much tax am I going to charge off of $1,050?
8663.
8663. So therefore, how much cash should I actually be receiving?
Um, 1136.63.
1136.63. That's how much cash I'm actually going to be receiving. So in this case, I'm going to go ahead and insert that this was a Memorial Day sale, 40% discount. Okay. Good. So in this case, right, I sold 175 mugs. So therefore, I also need to recognize the cost of goods sold, and I need to take it out from my inventory. Okay? So let's go ahead and figure that number out. It is $5.25. We sold 175, so at a $2.9178. So therefore, what is my total cost of goods sold for selling all 175 items?
510.62.
510.62. So let's go ahead and update our inventory one last time. So we have what, 925, subtract 175, should get a total of 750. Right? And in this case, right, if I started out with 269901 and I sold 510.62, what should be my total cost here?
2188.39.
Good. All right, bringing my cost per item to be roughly the same as before, except the last two digits are different. Okay. So here we got a grand total cost of goods sold to be $510.62. So 560, 510.62. Okay. Cost of goods sold is 501. Inventory is 150. Okay. And of course, I'm gonna also make a note that I sold 175 mugs. Okay. So then, last but not least, I guess, no, second to last, here on May 28th, customer C decides to buy all 50 black mugs at $10 each from you. Okay? And you offered him a generous additional 10% discount, and they paid with a Visa credit card. Right? So customer C decides to buy all 50 black mugs off of you, and you decide to give them an additional 10% discount. Pay with Visa payable. Okay? So how are you going to record this?
Checking and then sales.
Yes, because in this case, right, all credit card transactions are going to go straight to checking. Now, yes, you're going to have sales, but what else are you going to also include?
The mugs.
The discount.
You need to record the discount. Good. And then you need to record what do you always charge at the store?
Sales tax.
Sales tax.
Tax.
Good. Okay. So sales discount once again is 405. The sales tax payable is 230. Okay. So in this case, right, we sold all 50 mugs for $10 each. Okay, so that should be 500. Okay. Now in this case, we gave customer C a 10% discount. So in this case, right, is it 10%? Yes, you gave customer B an additional 10% discount. So therefore, what is the total amount of discounted?
$50.
$50. Okay. So then, how much tax can we actually charge customer C?
$37.13.
Good. So therefore, how much money is actually going to go straight to my checking account?
$487.13.
$487.13. Good. And I'm going to go ahead and write this in here that this was customer C, okay, received 10% discount, okay, for black mugs. Okay. Of course, if we sold 50 black mugs to customer C, therefore we also need to do our cost of goods sold and update our inventory. Okay. So go back to our inventory worksheet and plug in those numbers that on the 28th we sold an additional 50 mugs at the same 2.9178. So how much in grand total is my cost of goods sold for selling 50 of those mugs? Yep. All right, let's update our inventory. So if I started out with 750 and I sold 50, how much should I have left?
700.
700. If you had a total of 2188.39 and you sold 145.89, how much should you have left?
2042.5.
Correct. Okay. And of course, I'm going to go ahead and clear that out. Okay. So here we have our total cost of goods sold for 145.89. So journal 145.89. Okay. And here we sold 50 black mugs. Okay. So now, last but not least, okay, you paid off all 3 bills that you owe to Cuppy's Co. all in one check, number 201, and you should have a total of 700 units on hand left in inventory. In this case, do we have all 700 items? And yes, we did. So in this case, we did our accounting correctly. We sold stuff, we bought stuff, and we ended up with 700 items left on hand. So in this case, right, my only obligation I have left is to pay off all the bills that I owe for Cuppy's Co. Okay? So let's take a look at all 3 bills. So first bill we have here, right, was May 1st, right? We purchased 500 units, but we end up returning 15 of them. Okay, now in this case, I purchased on May 15. Did I actually meet the terms? Okay, so no, we didn't. We did not receive the 5% discount because we missed the discount due date, which is the 15th. So in this case, right, 15 days from the 1st is 16. So we missed that date. However, we also refunded 15 of them. So we have to make sure that we calculate that right there. Okay. Then we also purchased another batch of inventory on May 18th or May 8th, right? In this case, we purchased 250 mugs, but end up getting 50 of them as black. So we end up getting a 15% discount off of those 50 mugs. So we got some money back. However, in this case, they also gave us terms. Did we meet the discount due date?
No.
No, we did not meet it, right? Because in this case, it's in 15 days. 15 plus 8 is going to give you the 23rd. So we missed that opportunity there. Okay. Last but not least, we bought another purchase of inventory on May 20th. Okay, in this case, we purchased 400 units at $2.80 and no returns because this batch was good. However, did we meet the discount due date here?
Yes.
Yes, we did. So therefore, we need to have an additional discount of 5% off of the 400 mugs at $2.80. Okay? So in this case, let's go ahead and tally up our total accounts payable. Okay? So again, this is the 30th of May. We are trying to pay off what we owe. Okay? So let's check out how much we actually owe. Okay? So in this case, on May 1st, right, we had a total accounts payable of $14.25. However, we had to subtract out $39.75 because we end up returning 15 of those items. Okay? Then on May 8th, right, we end up purchasing an additional $737.50, but we end up getting an allowance Did we even calculate the allowance? Okay, well, I'm going to continue the formula and then we'll figure it out in a second. All right, then we had the purchase on May 20th.
Yes, we did. Account payable 20.63 no, on May 8th.
Okay, give me 1 second. So here we also have an accounts payable for $1,200. Okay. So therefore, we need to figure out what that amount was. Let's see. In our books, let's see, we returned or we got a refund for $20.63. So that should give you a grand total accounts payable to be a total of $3,302.12. Did you guys all get that too? Okay. $3,302.12 should be your total accounts payable that you owe. Okay. We're obviously going to pay in cash. Okay. And again, we recognize that we have a discount. Where do we normally take our discounts out from? And this discount is towards inventory. Anybody?
Well, where are you? Okay, I try to calculate the amount of the account payable, but it doesn't work. Okay.
Oh, no. If you're still trying to figure it out, go ahead and do it.
I did it. It's good.
Okay. Right, so how much is the discount amount for? Since we recognize that our discount was based off of May 20th, which was based on the total amount of the 400 times the $2.80. That's the only thing you can discount because the $80 is for the actual freight. Okay? So
We have the discount for $30. No, oh, that's on 22nd.
that's the 20, yeah.
Second, yeah, 1 second. $60
$60?
discount.
How did
Discount? Yeah,
how
1200, 5%.
not whoa, where'd you get 20%? They only gave us 5%.
No, 5%.
Yes, 5%. Now,
5%.
okay, so you said on 1200? 1200 includes the freight. Can
Yeah.
you discount freight?
How many there was a freight? 1 second. It is $56.
$56. Let's see.
One.
We'll check it out. Okay, so in this case, right? It should have been for the 12
That's good.
for ship
1,000.
1120, right? It's 400 times the 280 times the 0.5% should give you $56. So then, what account are we going to take that $56 out from?
Sell discount.
It's not, we didn't sell it to somebody.
From the inventory.
From inventory. So in this case, this one comes out from the mugs. Right? Because in this case, right, we purchased the 400 at full price of 1200, right? But in this case, since we're getting a discount, we have to take out that amount from our inventory because we didn't pay for full price. We got a discounted amount. So in this case, how much cash am I actually going to be paying Cuffy's Co? $3,246.12. So make sure you put your indication here that you wrote a check to Cuppy's Co. For purchases on 5158 and received 5% disc on purchase 520. Okay, and of course you used check number 201. Okay. Okay, so again, Mugs is count 150, and of course we didn't pay with cash, we paid with a check, so this should say checking instead of cash. Which is account 101. Okay. Now of course, because we discounted our inventory, we also need to place that into our inventory worksheet because now we paid off the this, right? It doesn't affect inventory. It doesn't affect the amount that we took off, right? Except for it's the 280. Okay. Now in this case, right, we need to calculate what 400 times 280 times 0.05, which is 56. All right. Okay. So therefore, we need to update our inventory because in this case, we need to say that we have a discounted amount. So again, 700 minus 0 gives you 700. However, the $2,042.50 minus the $56 is going to get you a total of $1,986.50, which drops your average cost per item down to almost 10 cents. Okay. Wow. That discount made a huge difference. Okay. And that is it for the chapter 7 and 8 review. Okay. Where we got to practice what happens when we use perpetual inventory, right? Every time we make a sale, we need to record and update our inventory, okay? And so it does, so in this case, right, every time we have a purchase returns, we just take it off immediately right out of the inventory worksheet. Straightforward. And of course, this is where we experience what happens when customers return items to you. If they return items to you with a full refund, then you have to update your inventory because they're essentially giving you the product back. But if you are haggling with them to convince them to keep the item and giving them an additional discount, then you're not going to put the inventory items back into inventory. So in this case, any questions in regards to chapter 7 and 8 review?
Nope.
Okay. So